the looser perspective too loose, or actually are you thinking we will get a balance here that helps serve your growth, but also serve security and the protection of consumers?
Yeah, I think, very commonly people misunderstand where Paul Atkins is coming from, assuming that, we're going to go from the Gary Gensler regulation by enforcement to all of a sudden no regulation at all. And Paul Atkins is very, very strict about no market manipulation and no fraud. So we're going to see KYC, KYB. We're going to see AML requirements. And that's going to be broadly across the crypto industry. And then also clear regulation. And I think if you look at, what Senator Warren's saying, before we saw all of the American companies get pushed offshore, whereas now we're seeing an opportunity to onshore these companies, make them, founded in the United States. And that's a really big shift and a big difference. And you can do that somewhere in the middle.
So when she was trying to speak to, I suppose, also the way in which he's managed to make it clear that he has no skin in the game. He has no exposure. He's selling off his assets. Are those in a position of power over in the administration and in the various agencies doing enough of that, signaling enough of that, that there's transparency when it comes to crypto holdings and they're not sort of managing to benefit themselves?
Yeah, it's a great question. I mean, the same question was asked about David Sachs as well when he divested, I think it was roughly $200 million worth. And he did so at a loss. And, I think it's really important to your point. One, he, disclosed exactly what the positions are. So Atkins has 2 equity positions in Securitize and Anchorage. He has 1 position in a hedge fund called Off-Chain Capital. And he said he divested those. So, if he gets approved on Thursday this week. And so I think we are getting the transparency we need. But the bigger question here is, do we want, professional regulators who haven't been in the space, haven't had that dialogue, running the regulation for us? Or do we want people who have actually been in the trenches, who have had those conversations and dealt with those problems directly, to be running and making those decisions on our behalf?
Okay, therefore, what you want is someone in the job who understands the asset class and then makes appropriate regulatory changes appropriate. Are you getting the transparency you need there as well? We're already seeing focus on, well, stablecoins, it feels like, and unwinding some of the latest things done by the Biden administration.
Absolutely. So to your point, the IRS broker-dealer rule was just, voted by the Senate. That passed. And so it's going to President Trump. That's going to unwind, as you mentioned, the need for decentralized exchanges to file, a 1099 for every user on the platform. It was very much, not applicable to the way permissionless platforms exist today. So it's great to see that happening. And from what we've heard with colleagues who are in D.C. every single day is that every day action is being happened around, we have Fit 21, which is currently going through Congress. That has a stablecoin regulatory oversight and guidelines. We have Wyoming that just announced this week that they're going to launch a stablecoin.
And a bank in Wyoming.
100%. So we're seeing a lot more progress in the last, call it 4 months than we've seen in the last 4 years combined. And so it's very exciting for any American company or anyone who's sitting in America building their company as well today.
We've actually just got some more steer coming from Paul Atkins as he undergoes his oversight over at the Senate. Let's just take a listen into what he's just been saying.
Unclear, overly politicized, complicated and burdensome regulations are stifling capital formation, while American investors are flooded with disclosures that do the opposite of helping them understand the true risks of an investment. It is time to reset priorities and return common sense to the SEC.
Returned common sense at the Senate nomination hearing coming from Paul Atkins. What next for the common sense? You've already said what's already underway when it comes to stablecoins. What are you lacking in your part of the business to get more institutional investors active in the crypto space?
Yeah, so if you think about it, there are a couple buckets. The first is the United States, without a doubt, has been losing in the geographic regulatory space. So we have in Europe MiCA, we have in Singapore MAS, and in the US we don't have anything. And so, it's not just about onshoring American companies that went offshore, but it's also how do we compete so that we can actually get companies from Europe who are under the MiCA registration to come to the United States as well and build here in the United States. The other thing, too, is, how do we treat clients? How do we structure our entities? A large part that hasn't been discussed for token companies specifically is all token foundations are typically under BVIs or the Caymans. And a big discussion is how do we bring that to the U.S.? How do we create launch foundations, token foundations in the United States with clear guidelines?
And why would we want token foundations launching in the United States. Just reiterate the positive nature of this for investors or entrepreneurs who are watching this.
We're looking for transparency. We want to see exactly how these companies operate. We want to be able to go through, tax filings if we need to and audit them as well. So, it gives you the transparency everyone's asking for. But to do that, you have to onshore the company first. And in order to do that, you need the clear regulation. So I think we're definitely seeing a path forward with Atkins. It's going to be really exciting to make, New York, the United States, the crypto capital. We are for finance. It should be for crypto. And it's one step in that direction.